Investors and traders, welcome to the channel. Market chart pattern today is 5th of March 2025. Hope everyone is having a great day. We will be taking a look at the key US markets for this video segment. As always, the video is for educational purpose only and it's not a financial advice. So something really interesting and key happened today. Well, it's been happening since the beginning of the week in the dollar index. So the US dollar has been actually weakening against a basket of currencies, and this is the long-term monthly chart of US dollar, and we can see that on the month of February it actually closed in the negative territory, and the month of March we have already taken out the lows of February. However, we have of course not completed the month of March, so anything is possible. Just wanted to draw your attention to the symmetry when the dollar had its a bull market starting in 1992. It went up for about 10 years, and there was a double bottom formation here in 1995, and then a really long bear market, and this is when the great financial crisis started. The dollar actually went range bound for quite some time. Then in 2011 started the bull market in earnest, and then what we are looking at is basically this 12-year long rally, which completed in September of 2022. So the time symmetry is there, and the other interesting thing is that this rally was about 78.6% retracement of this high back in the early 2000s to the 2008 low. And then what we have seen thus far appears to be more of a retracement. Now I will just move, and of course we completed this ABCD right where the highs came in, and then we have seen a nice retracement right to the 61.8% retracement of the lows to the highs, and it is a retracement thus far. Now the key thing is this 99 level. If the market actually gets below that, then I think we are in this ABCD to the downside, and we could see an accelerated move for the dollar or further weakness in dollar to come. Now moving down to the daily chart, the weekly chart, what we can see is this is the region where we were looking for the dollar to get to and complete this ABCD pattern formation, and then we have seen a nice rally right into this zone that we had identified once it got above the 107 level, and we have seen the market not able to get above this level. Now it's resting right at the 89 period moving average. I think some support is nearby, which I'll show you on the weekly chart, the daily chart. So let's go down to the daily chart. Here you can see that we have this nice pattern completion right here, 1.618 expansion. It was a 3 drive to the top pattern, also an ABCD, and we have just seen the market move lower, and this top came in on the 13th of January 2025. That's when also the stock market had put in a bottom, and we'll discuss that later on with the low which came in yesterday. Now what we are looking at is basically this move which actually took out these lows, and what we can see is there is some gap formation right here. So it looks like the market may go and try to fill in this gap, and if we also draw a retracement of these lows right here to these highs, there we go, then we can see 103.75 is the 61.8% retracement. So it looks like the dollar has a little bit of further weakness to go, and we could actually see this level as a potentially key support. And if we were to draw an expansion of this level right here, the 1.272, yeah, it's pretty much where the market closed. So let's keep on watching 103.75 as a potential support region for the US dollar. And on the flip side, here we go. We can see a look at the Euro USD. Really strong, got above the 78.6% retracement of this. So I am now going to actually remove this one because not this one, the one up with this one actually. Here you go. Also remove this one. And we're also above the 78.6% retracement of this swing as well. So, you know, really strong move which has come in quite a short period of time. It's also above the 38.2% retracement. So I think we have seen it appears we have seen a pretty nice low in the US dollar, and just want to show you. And we have just got 61.8% retracement. So we could see some sort of resistance right here. Maybe after having such really large bars, maybe the market goes sideways a little bit. So the key thing is here, right at the weekly chart, and this is the zone which we had identified as a pretty strong support, because we had a number of confluence of things coming together. So we had retracement of 61.8% from this low to this high. We had an ABCD which is extended, so 1.272 coming down a little bit right here, and we also had an expansion of 1.272 of this low to this high. So this was telling us that it was a zone where we could see strong support come in, and thus far this is what we have seen. Now the market is already above the 31.8% retracement. It's very clear close to the 200-week moving average. So there is a pretty good chance that we might have seen an important low. Now this is beginning to look like a head and shoulder formation with this. Well, this one is a little bit lower, so I like to see in time as well. So I think it's a little bit early to say an inverse head and shoulder pattern, but clearly this level is really strong. Now if we just take a look at this on the British pound as well, which was also very strong, and this is the British pound, we can see that 38.2% retracement came in around 1.22 level. It went a little bit lower, but then we have seen a 6.55% rally. So folks, when I was doing this and I was coming with these potential reversal zones, I did receive some negative comments as well about the analysis, but look, you know, it has turned out to be all right. And these are weekly charts, so you know it does take the market to make some take some additional time to make those reversals. But those levels have been held, and we can easily see that. And now on the daily chart, here we go. We had these further levels coming right here, and the market went just into that. So thus far, you know, I think it's got a potential to move quite high now. Because it got above the 1.266, which was the 78.6% retracement of this swing. Also has taken out this swing high. So near term, maybe it looks like this might be the target, which is around 130 for the British pound. Okay, now let's move down to take a look at what is happening in the Treasury notes. Here we go. So this is the Treasury notes, and here really interesting price action over the course of a couple of days. So we have seen the dollar weaken, but we are seeing over the course of last couple of days the yields move higher. This is really interesting because what we had seen was the yields were actually moving higher, and the dollar was also moving higher, so there was a correlation, and that seems to be broken. So this is why there's a lot of volatility in the markets, especially this week. Equity markets, currency markets, bond markets, all these markets have a tremendous amount of volatility going on. So now the key is that it broke below this 38.2% retracement, and the chances are we are in this blue ABCD much lower. But of course, it's not going to go down in a straight line, so we could have rallies or retracements. And if we just take a look at this, here we go. I think between this level, I'm just gonna draw this, we could have some resistance right here. So I think yields can move up a little bit higher, around 4.05 to maybe around 4.10 on the 2-year Treasury note. And then this is a potential resistance zone getting above this. Moving averages are right here, but a deeper. I would not like to have a deeper retracement. If it's able to find resistance from the 38.2% and 50% level, then we could have a stronger and quicker move for the yields to move downside. Let's take a look at the 10-year note, and we can see that kind of a double bottom formation, and it's also rallying. I think it's easier to see this on the futures chart, and here we can see that it took out the highs of 6th of December yesterday, so that's Tuesday, and then today we also had a follow through. So let me actually get rid of this, and this move is actually 1.272 times. So let me actually draw it like this. Here we go, and it had already broken the bearish symmetry. So here you can see that this is what it had done. So it's possible we see a retracement for this right here. So let's take this swing, and maybe around 110.15. So that's gonna be the 38.2% retracement, where it could find some support. It has had pretty big moves to the downside. We saw some big moves to the downside right here as well, but then we saw a pretty nice move to the upside. And if we just take the symmetry concept, here we go, and let me make it, then I think it could move a little bit lower. Here we go. So that's gonna be about 50% retracement. Oops, let me actually draw it again. Okay, 50%. Here we go. And if we just take it from this bottom, here we go. So it will be about 38.2% retracement. So this zone is gonna be really important right here. So roughly around 110 level, the market could actually move about a point to the downside in the 10-year treasury note. And if we just take a look at this on the long bond futures, here we go, long bond futures, it actually did this ABCD, whereas in the treasury notes the CD leg is 1.272 times. Even it went a little bit higher. So I think it could retrace a little bit lower as well, maybe around 116 for the long bond futures. So really interesting. What is happening is dollar weakening, but the bonds are actually the yields are actually rising. So this is an interesting situation. Okay, very quick look at the gold, and then we'll move to the equity markets. Here we go. So the interesting thing is, with the dollar being as weak as it has been past 3 days, we have not seen a huge amount of rally that it's able to take out these highs. So we have seen thus far a retracement like this. Here we go, which went, I think, to around 61.8% retracement, between 61 and 78.6% retracement. So let's see what sort of price action we get, because today, if you see that, it just took out the highs of this, but it just closed in a narrow range fashion. Maybe it just goes range bound. The interesting thing is that the dollar has been much lower, but we didn't see much of the kind of price action that we have seen in the currencies, fiat currencies. We have not seen this in gold. And let's see what the Bitcoin is doing. A really quick look at the Bitcoin. So this is when over the weekend the news about the reserves came out. Then the market just gave up all its gains. Stock market was under a lot of pressure as well. So the Bitcoin has recovered, but it's not as strong. So I think this is the key low. What I would like to show you is actually these ratios. They were working really well. So if we just take this low to this high, then this low, which came in yesterday, was exactly the 78.6% retracement. And if we just take this high to this low, it was also exactly at the 78.6% retracement. So for shorter term traders, it's pretty nice that way. and you can draw a basically a dynamite triangle. Here we go. There we go. This is a dynamite triangle. If it moves out of this triangle on either side, you're going to have an explosive move, and the chances are the explosive move is actually going to be the upside. Okay, now let's get and take a look at the stock market indices. S&P 500 is the cash index, and here we can see the market has been under a lot of pressure. This is the 13th of January low that came out. This market on the cash basis yesterday actually took out the lows and closed below the low, I believe. Let me double check. So the low, the close was 5778, and yep, it did. And but there was just no follow through. The important thing here also to note is it went right into the 38.2% retracement. One thing I just want to point out is on the futures chart. So I'm moving on to the March futures, and in the March futures, because the rollover on the continuous chart, the data is a little bit not accurate. So I moved down to the March contract, and we have a really nice ABCD one-to-one price projection right at the 61.8% retracement of the September lows, and we have the 38.2% retracement coming in from the 5th of August lows. So 6th of September 61.8%, 38.2% from 5th of August, right into or very close to the 1.272 expansion. So a number of confluence of things coming together in this entire zone, which is a little bit wider than what I would have liked. But this thing is actually, if you look at the ATR, it is moving a lot as well. So that's why it has held this low of 4th of March. And today was just an inside bar. And if we begin to take out the highs, especially the mother candle of 4th of March, we can get to about 5,900, which is 38.2% retracement. So the bulls need to do a lot of work because technically a lot of damage has been done. But if we are able to clear this 559.07 and close strongly above, I think 4th of March could have been an important low, just the way the 6th of September was, and also when we saw the low come in on the 5th of August. So still a little bit early to say, to be on the safe side. So we're waiting for further price action confirmation, but we have had 2 days with an inside bar right here, where every time the market went lower, the lower prices were rejected, and the market actually moved higher. But the amount of volatility that exists in the market is actually tremendous if you're watching it on an intraday basis. Really a quick one, which is going to be the March futures for the NASDAQ. And for NASDAQ, we have the CD leg, which is the 1.272 times the AB leg. And over here, we have actually the 61.8% retracement from 6th of March, and the 5th of August, we have the 50% coming together. So a number of confluence of the pattern and the ratios coming together. It's always a region we pay very, very close attention to because of the harmonics that exist. These are usually strong support and resistance points. So thus far, the market did not come as low as what we saw in the S&P 500 to the 4th of March lows, inside bar again. If there's going to be a rally, it's 2100 roughly is where we should be watching for potential resistance. And if the market begins to clear this resistance level, I think there's a possibility, and again I'm saying this possibility because there's a lot of damage done, so the bulls will have to do a lot of work, that the 4th of March might be an important low which might have occurred, again pending some further confirmation for price action. Russell 2000, I'm gonna do a quick one for the Russell 2000, and here we go. Let's see if we have the ABCD for the Russell 2000 as well. Okay, I don't think we have the Russell 2000 ABCD because it went a little bit lower, maybe on IWM. So here we go. Yeah, no, not even that for it. It actually misses by quite a bit. So here what we have is basically the market actually gone right into the this is the 5th of August, about 78.6% retracement right here, and it's just hovering around that level. So it's definitely the weakest index, but it's also finding some support because of for the other indices finding support. And then if we just take a look at the YM, which is going to be the Dow Jones. The Dow Jones is also pretty weak, but it's finding support from its 78.6% retracement. I don't have a proper ABCD here in this index, and if we were to take a look at NYA, here you go. NYA was not able to take these highs out, and it's done a retracement around 50%. This is where it is hovering around. So what we are looking at in the stock indices is there's a possibility 4th of March might be a potential low, pending further price action confirmation. So if the market begins to actually close higher, and especially is able to take those 38.2% retracement levels out to the upside, the bulls will still need to do quite a lot of work. But I think pending further price action, possibility is there that we might have seen an important low 4th of March. So this is what we are watching for. Thank you very much for watching the video. If you found this video of educational value, you learned something, give it a thumbs up. And if you like our technical analysis, please subscribe to the channel. And if you do, then hit that bell icon button. That way you will know when the new videos are posted and you will not miss on anything. Thank you very much. Good luck, good trading, and speak to you guys soon.